Hello, good evening to all of you. Today we will learn about what is master budget and how we prepare master budget. Master budget. Master budget is a summary of various functional budgets. Means this master budget include sales budget, production budget, production cost budget, cash budget, projected income statement and balance sheet. Means with the help of all these functional budgets, we can prepare master budget. Master budget is prepared by considering what? Various budgets into one consolidated budget so as to represent the budgeted profit and loss account and budgeted balance sheet at the end of the budget period. So, with the help of the various budgets into one consolidated budgets, which is called master budget, being prepared so as to represent budgeted income statement and budgeted balance sheet at the end of the budget period. So what is master budget? Master budget is summary budget incorporating what? Incorporating its component functional budgets. What is functional budget? Budgets being prepared as per functions. So, cash budget, production cost budget. These are functional budgets, which is which is been considered. These functional budgets been considered. These functional budget is incorporated in a budget which is called summary budget, and summary budget is what? Master budget. So this master budget is prepared by whom? By the departmental heads of each and every department, and submitted to whom? Submitted to budget committee. Budget committee is a committee in which all the departmental heads are supposed to be the member, and budget officer will be the head of this budget committee or budget controller. So all the members prepare their own budget, submitted to the budget committee. In that budget committee, this summary budget, this budget being approved, adopted, and employed, and then will prepare master budget. So master budget is required the approval of the budget committee. That is, all functional, all departmental heads is the member of the budget committee who prepare their own departmental budgets and submitted in the budget committee for approval before it is put into operation. So it is used to coordinate the activities of various functional departments and all to serve as a control device. Is that clear? So master budget is a summary budget incorporating its component functional budgets, which is finally approved, adopted, and employed, prepared by budget officer. Which budget prepared by officer? Budget officer, that is master budget. So this master budget is required the approval of the budget committee before it is put into operations. Is that clear? Now, take one example again to understand how to prepare this master budget. Suppose a garment manufacturing company requires you to calculate and present the master budget for the next financial year. To prepare this master budget, I already told you that this master budget incorporate all the functional budgets like sales budget. So here we need the data of sales. So estimated sales are, suppose there are two types of yarn, cotton and synthetic. To prepare this sari, so estimated sales of yarn is 6 lakhs and synthetic is 10 lakhs. So the direct material cost of yarn is how much? 6% of sales. Direct wages is how much? 20 workers at the rate of 300 per month. So direct material cost you have seen, direct wages you have seen. It means material budget, labor budget is already known. Factory overhead budget says indirect labor, work managers at the rate of 1000 per month, stores and spares 2.5% of sales, foreman's salary is 9,600 rupees. Depreciations on machinery is suppose 25,200. Lights and powers suppose 10,000. Repairs and maintenance suppose 16,000. Other sundries expenses that 10% of direct wages. Administrative selling and distribution overhead is 28,000 per year. So these are the budgets of different departments approved and incorporated in master budget. So here you see the sales budget, here you see the material cost budget, here you see direct labor cost budget, here you see factory overhead budget, here you see administrative overhead budget. So all the budgets is incorporated. Now how you prepare master budget based on these facts? First of all, we consider sales. And at the end, what you like to know? That is income, profit. How much profit you will get with the help of incorporating all these budgets in near future. The sales budget says yarn 6 lakhs, cotton yarn and synthetic 10 lakhs. So the total sales budget is 16,000 rupees. Now production budget, that is work budget. So how you calculate production cost budget? That is direct material cost. 6% of sales. Sales is how much? 16 lakhs. 6% of 16 lakhs is 9,60,000. Now we include direct labor, that is direct wages is how much. 20 workers you need, each worker you pay 300 rupees. So 200 multiplied by 300 multiplied by yearly budget you want to prepare, that is 12 months. So 20 workers at the rate of 300 per workers multiplied by 12 months. The direct wages you are supposed to pay how much? 72,000 rupees. Direct expenses is nothing. Nil. So by adding direct material, direct labor and direct expenses, you will get how much prime cost incurred. Now in prime cost, what you do? You add factory overhead cost. In factory overhead cost, you are need to include two, that is factory fixed overhead cost and variable overhead cost. Fixed overhead is what? Indirect labor, which is fixed. Foreman salary. Indirect labor is how much? Indirect labor is 12,000 rupees. That is 1,000 rupees per month. That is to whom? Indirect is what? Indirect is the labor which is not directly involved but supervising. It's called indirect. So work manager salary is indirect. To work managers you are paying 1,000 rupees per month. So for 1 year how much? 1,000 per month multiplied by 12,000 rupees. What else? Foreman salary you are paying annual 9,600. Depreciation you are paying every, that is fixed, 25,200. Other sundries you are paying 10% of direct wages. Direct wages is how much? Direct wages is 72,000 rupees annual. So 10% of direct wages is 7,200. So fixed overhead is the addition of indirect labor, foreman's depreciation and other sundries. So indirect fixed overhead budget supposed to be 54,000 rupees to be incurred. So in prime cost, when you add fixed factory overhead, that will give you the picture of 10 lakhs 84,000 rupees. That is 10 lakhs 32,000 is prime, 54,000 is factory fixed overhead. So 10 lakhs 84,000 rupees. Now you have to consider variable factory overhead. Variable factory overhead is how much? Variable factory overhead is stores and spares, which varies as per the volume of output increases or decreases. That is 2% of sales. 2% of sales, 2.5% of sales. 2.5% of 16 lakhs is how much? 2.5% of 16 lakhs is 40,000 rupees. Light and power is 10,000 rupees. Repairs and maintenance 16,000 rupees. So in your data, stores and spares, light and powers and repairs and maintenance, these are variable overhead, factory overhead. And the variable overhead to be incurred is 66,000 rupees. So when you add 66,000 rupees in 10 lakhs 86,000 rupees, the total sum of factory or work overhead, that is work cost or cost of production, is 11 lakhs 52,000 rupees. When you deduct work cost or factory cost from sales, you will get gross profit. Gross profit will be 4 lakhs. So you deduct 11 lakhs 52,000 from 16 lakhs. The gross profit will be 4 lakh 42,000 rupees. Now from gross profit you should deduct administrative and selling and distribution overhead. the amount of administrative selling and distribution overhead has given, that is 28,000 rupees per year. So now to deduct 28,000 rupees, that is administrative selling and distribution expenses, from gross profit, the remaining profit, which is here net profit, is 4 lakhs 20,000 rupees. So this is your master budget in which you are incorporating all the functional budgets, that is sales budget you have considered, production budget you have considered, administrative expenses budget you have considered, overhead budgets you have considered, and so as to give you what? Net profit. And here net profit is, you are expecting net profit to be 4,42,000 rupees in the next financial year, with the help of this data of sales, data of factory production, as well as overhead budgets. Is that clear? So this is your master budget. Now again, it is your responsibility to make a practice of this master budget by changing the data from 6 lakhs to 60 lakhs, 10 lakhs to 100 lakhs, 6% to 12%, and so on and so forth. And then if you practice 4 questions, if you solve 4 questions of master budget, I'm sure that there will be no problem to understand master budget in future. Even if you have any questions related to master budget, you are free to ask me any questions and give me your opinion in the comment box, whether you understood or not. If any problem, what is the problem? Then I will incorporate the problem and I will discuss the problem in the next lectures. But don't hesitate. If you hesitate, then the problem will remain the problem. I'm delivering lectures to help you, not to create problem. So don't hesitate. I'm telling you repeatedly, don't hesitate to ask me any questions so that I will solve your problem. So please keep it in mind. And after this, the next lectures will be flexible budgets. Okay? Thank you very much. Bye-bye.